Thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We kind of like to get into what drives mortgage rates or what's impacting them on a daily basis, whether if it's, again, economic data that's being reported, or if it's change of the sentiment in the markets by investors, or if it's headline news or geopolitical. We kind of like to get that out there for you guys so that way you guys can make informed decisions if you're in the market of refinancing or purchasing. And so if you're doing those two items, you're probably looking at rates. So this will give you hopefully a guide or at least a little bit more information before you make a decision whether to lock in a loan or if you want to kind of hold off on the lock and wait to see if there's better pricing later on. So hopefully this will help you guys out if you guys are in the market. And a little bit about myself is I am a loan officer. I do work with a national lender. We're here to help in any capacity we could for you guys, whether it's answering questions such as about mortgage rates or mortgage programs that might be available out there, or maybe the process that's out there. We're here in those capacities as well. We'd love to earn your business, so please give us a shout. We'd love to be able at least have a chance at it. So please, again, please reach out. Whether if you're looking to buy, and we can get you guys pre-approved and buy that next property, or if you guys are looking to refinance, we can do both. We can do both very well here. I'd love to be able to earn your business. Without further ado, we'll jump right into it. We'll start off with the economic data for the day. Every Thursday, we get the initial jobless claims. So last week, we had 326,000 people apply for unemployment. That was revised a little, slightly higher to 329,000. Forecast was supposed to dip down to 319, and it dropped much lower down to 293. This is the first time since the whole panic began. We've dropped in the twos now. So the markets, as you'll see, stocks and everything are real pleased with that. Now, on the personal level, is we have seen a lot of people who were fired due to the vaccination mandates and are not going to be applied towards that. So we'll have to kind of wait and see what the other numbers will look like once that comes out. And this is starting to happen now on those. So the jobless claims won't reflect those data, and even probably our unemployment rate won't probably affect that. But you look at the U6 number, I think it looks at more at the overall people who the overall number will be a little bit more realistic. Now, let's continue. If you look at the continued claims, we see a drop there, which is obviously good news, from 2.7 range down to just under 2.6. Now, we also got inflation data on the wholesale side. Now, we don't give a lot of weight to this because even though sometimes the wholesalers will incur more costs at times, they don't always pass that on to consumers. And if you recall, yesterday we had the CPI report, and the core came in tame, whereas, of course, the headline, the food and energy, we saw a rise on those, and that one continued to rise. But anyway, so the producer price index initially came in 0.7% back in August, month over month, and month over month for forecast for September is 0.6, and it came in slightly under at 0.5%. So, but still obviously very high here. Now, when you remove food and energy, we get what they call the core, and it's month over month. August was at 0.6%. Forecast was calling 0.5%, and it came in at just 0.2%. So a lot of things are obviously moderating a little bit on the inflation data. However, food and energy, of course, we're seeing continuing to rise, and especially on the supply chain of things. So with the supply chain decreasing supply, we're seeing a higher, and with the high demand, prices are rising on those categories. Now, its year over year went from 6.7% back in August. Forecast was supposed to be spiked to 7.1. It went up, but not quite as high as the forecast at 6.8%. So better than expectation, but still not very good in that regards. Now, stocks are up today. They like the jobless claims numbers, but they're also getting the first glimpse of the Q3 earnings reports, and banks have been rolling in. And of course, they're coming with much higher earnings reports, so they're kind of beating their estimates. That's pretty much it for that. But in terms of mortgage-backed securities, what mortgage rates are doing today, we're up about 11 basis points. We actually closed up 23 basis points yesterday, which is obviously good news. We're up 11 basis points now. If you look at today, this is kind of the fluctuation we've kind of saw for the day so far. So we did have some fluctuations. As you saw that long wick in the bottom there earlier today, we were way down here and kind of worked our way upwards. So to kind of go back to it. But what does that mean? Pricing is better. We should get better pricing in our interest rates. We're still obviously a ways from this range here but before we had that before we had all that big drop a couple weeks ago. But in regards to where we are right now, pricing is a little bit better. This week has been a little bit kinder compared to the last 2 weeks. We've been kind of seeing uh, almost daily drops in the markets here. Treasuries are down to about 1.52. It broke below that technical level that was here, and now we're starting to kind of break below another technical level here. So this is good news and putting less pressure on mortgage-backed securities and hopefully creating a little bit more liquidity. Therefore, hopefully see some more improvement in our rates here for those who are in the markets to buy or refinance. So again, a little bit about the national average. I got a little bit of something down here. 30-year fixed, 3.18. This is kind of a national average out there, and the 15-year is at 2.59. And these do have built-in points into them. So this is again just an estimate for what the national average is out there currently for those two conforming loan amounts. All right, folks. I hope if you find these videos useful, please smash that like button and follow us. We greatly appreciate you guys. If you guys need any assistance with anything, again, please reach out. We're here to help you guys in any capacity as possible. You guys have a great rest of your day. Thanks so much for watching. I look forward to see you guys in tomorrow's video. Bye-bye.